Okay, so today we'll talk about how to improve your strategy 400% overnight. And that 400% is not an exaggerated number, that's like a conservative number. So you might be asking, okay, well, how is that possible? How can you improve anything 400%? Well, you can. And you much more than that if you put your time and energy into places that give the largest leverage, right? So this is what we'll be talking about, and this applies to anyone that well, first of all, has a strategy, right, and wants to improve it. Maybe it's profitable slightly, maybe it's well profitable, maybe it's not, maybe it's up and down. That's the call for you. And also for people that don't have a strategy, because you will learn how to get started, how to pick the right strategy, and then how to improve on it, right? So those are the all those people will learn something from this call, and yeah, that's what we'll be covering. Maybe you guys saw this already. It's the simulator. We'll get there later. This has been, as an example, this has been my trades just over the day, or well, a few days really. Just longs on Bitcoin in that range, right? And like I said many times before, it depends on your interpretation. The same market, right? The same price action, but different interpretations. Someone who's scalping the 15-minute like me and essentially just longing, right, is doing fine. Someone who's shorting the top is doing fine. Someone who's on a 4-hour time frame and just overall short, well, they're doing fine too. It's just a much bigger trade, right? Whereas we look at the 1% profit, they look at a 20% profit spot, right? But it's the same exact thing, it's a different interpretation of the chart, right? So whether you're long, you're short, you're whatever, it doesn't really matter. What matters is, what is your theory, right? What's your plan? Do you understand that plan in the first place? And then once that plan gets executed, how do you manage your trade, right? And that comes then down into, well, how can you improve your strategy, right? So how can you improve your strategy, 5 times, 10x, 20x overnight? Well, first of all, you need a strategy, right? That's step number one, and that is something that many people are lacking. And if someone asks me how can I improve trading, and I ask them what's your strategy, and they cannot give me a clear answer of what's the entry, what's the exit, then that's a problem. Because unless they have 50 years of experience and can just wing it, then they probably will have a hard time, right? And even if it doesn't seem like that, if I get anyone and I'll tell them, hey, if you trade for me for 2 weeks on a demo account and you are consistently profitable during those 2 weeks, I will give you 500 grand to trade with, they'll struggle. They won't make it, right? And that's just because of the strategy. And it doesn't mean that you can't have a profitable trade. The problem is that you cannot have, profitable trades consistently, right? Because there will be some, bad scenarios that will just break your account, right? This is something that we've been covering many times over, but it's very, very important, right? So first of all, well, what is your strategy, right? We covered a bunch of them, over our calls. The basic ones are, trend following strategies and trend reversal strategies. You have 2 pockets, right? Trend reversal strategies are the ones that are trading in a range, and then trend following strategies are the ones that are breaking out of the range, right? Ranges are essentially boxes in the market where the price just, chills in, so to speak, right? Essentially there's like one box here and a higher box here. Let me just draw it up for you real quick for the people that haven't seen it a million times. Right, box, another box here, another box here. So the market's either in a box or it's going to another box, right? So far so good. And a trend reversal strategy is a strategy that trades in the box, right? So when we reach the top of the box, we are betting that it will turn around. And a trend following strategy is one that breaks out of the box and then we bet that it will continue going up or down. So those are the two strategies, right? So how do you pick a strategy? Number one, what do you like? What's your personality like, right? Are you like Alex that likes, huge wins, even though he might be wrong 4 or 5 times in a row, and then, make up for all of it and way more in a huge move? Or are you like me that likes high probability trades where I'm right, 8, 9 out of 10 times, make money 8, 9 out of 10 times, and then one time I'm wrong, right? So those are kind of the theories, or that's the emotional toll that you need to pick up, right? So that's why it's important to pick. Now, what we do is obviously we trade multiple strategies, and we trade strategies that are negatively correlated, so they're essentially, helping each other out in the way of when one loses, the other one wins, right? So if you have strategies, this is actually a good use of this. If I go to our dashboards here, we have a bunch of strategies here, and pretty good strategies. They're live trading too. This is a live trading chart, and the thing is that you have a bunch of strategies on a bunch of coins, and here you have the top strategies. Here you have the users, and Bandy's here, Hoover's here. This is just because you guys have the access there, and you just essentially trading the same way I do. So you have the strategies here, and if you scroll down and you toggle the description here, you have the description of the strategy. So this is a good starting point if you don't have one, is to go through these, maybe even through the top couple of ones, and look at those strategies, see how they behave, and based on that, learn about them, and maybe that's something that you might like or you might use, right? You can see here like this, and this is when you see this, ugly chart, this is our proprietary backtesting and live trading, simulation and then live trading tracking, right? So this is the actual trading, how it would actually one-to-one be trading, right? Including all slippage, all market movement, intra-candle data, all of that, right? So this bully strategy, essentially all it is a trend reversal strategy. As you can see, it's shorting here quite a bit, and now it just longed. So that's a trend reversal strategy. And then we have this one, for example, which is a trend following strategy, right? Which we'll load in a sec. So, and the thing is that what we do in the hedge fund is we do something like this, where we have 9 strategies, right? Where, one of them is the bully here. One of them is the stock BTC right here, with different allocations. As you can see, this one that I just showed here has the largest allocation for a good reason, because the most consistent strategy. And this is the equity curve of all the strategies trading together at the same time. Again, simulated in the back and live trading right now, right? And here you see the actual performance of those bundles, which are without leverage, by the way, right? So these are without leverage. So these strategies, when we go over them, and when I show you some trend following or trend reversal strategies, maybe give you a couple hints with indicators and stuff. You know, they're based off of information that we're using already, right? Something that we've just been running for a very, very long time. And the reason I don't push these strategies right at the beginning is very simple and interesting, actually. And that is that if I show these strategies and go over them in detail too early into, you know, your education level, you will not like them because they are slow. They're relatively slowly trading. So this one, I mean, within this, the bully here had, I think, like 4 or 5 trades, which is actually fine. But you know, sometimes, and we will get into it, you know, sometimes this strategy doesn't trade for, you know, a month, right? So you know, usually that is not an attractive option for like day traders. But you know, when you have an amount saved up and you just wanted to trade, you know, at a low risk with a super low volatility, then you know, that is the way to go, right? I have sent into the Discord, I have once sent a PDF with bundle 4 that was the report of our trading, and it had a Sharpe ratio of around what, like 2.9 or something like that, so, which means the Sharpe ratio is essentially just a measure on how, you know, volatile the strategy is compared to how profitable. And everything above a 1 is good, everything above the 2 is really good, and above a 3 is, you know, close to impossible. We have a 2.9, right? So it's a very, very consistent strategy. And you can see that because, you know, you don't have huge drops down, right? At all. You don't have big drops down, which is, you know, what investors like to see. So, or like, you know, what anyone likes to see, essentially. So right, so you know, picking a strategy is important, and if you don't have any, then you know, just use the ones that we use in the Discord, right? Which is, I can give you one right now, free of charge, which is, you know, whenever there's a range, right? That's, you know, you can just use your 2 eyes and see if there's a range, and also I will tell you. You'll see it yourself, but I will also tell you when there's a range. So whenever we're range trading, right? You will get this indicator, shadowed Cypher, trauma, right? Which is essentially just this line, right? And then whenever the price is above the line and your stochastic with an 1818 setting is down, bottomed up, and you have an alignment over, say, 3 time frames, the 30-minute, 15-minute, and 5-minute, you long. And if the price is below the line, which is, you know, in a downtrend, you short. And guess what? It's gonna work. Why is it gonna work? Because, and you know, obviously you need to trade manage the right way. But why is it gonna work? Because this is essentially a like a trailing trend indicator, right? It shows you the trend. So if the price is above this line, it means that we're in an uptrend, meaning that your longs have, you know, a bigger potential of success than your shorts, because overall you're in a long trend. And then you try to time the time right with your stochastic, and you'll be doing pretty fine. This is very similar to another strategy that we have, which is not on our dashboards yet. It's going to be there, you know, within a couple hours. So maybe if you watch the recording, it's there already. The reason it's not there yet is because I'm not going to go into too much detail here, but the way we process the data, so the candles that you see here, they are, you know, pre-processed in a way where you have it aligned over multiple time frames, which just takes a lot of processing power to do live. So, you know, I'm just running it right now on my PC and then hooking it up for you guys to use. So yeah, number 1 is choose a strategy, right? Trend reversal strategy, I just gave you one. Trend following strategy would be the opposite, meaning that whenever we just crossed the line and we would have the stochastic topped out, aligned on 3 time frames, you short. That would be a trend following strategy. Those are just 2 strategies I gave you, and if you use them, if you take that as a strategy and now you go through the points that I will cover right now, you'll have a good time trading. Just right there. Okay, so first of all, you need a strategy, right? So if you don't already have one, pick one. Don't have the shiny object syndrome, right? We talked about it, uninformed optimism. If you already have a strategy, stay with the strategy, improve that. Just because I showed you a couple fancy numbers doesn't mean that you need to jump over to the other strategy, right? Stick with your strategy. We had, a trend following, trend reversal. If you don't have one yet, I just gave you one. Other than that, you can look through the dashboards and look at the look at the descriptions and look at the trades, right? And then you see pretty much what it is, how it works. You see the bully, right? The trend reversal strategy has a Sharpe ratio of like 3, right? And a daily volatility of 2.5, which is very, very good, right? Yeah, strategy Sharpe ratio 3.02. That's insane. So yeah, that's step number 1. Have a strategy, right? Now, once we have that strategy and we're trading it, right? Let's just assume we're trading it. Yes, I would recommend using more than one strat. But the thing is that if you don't have any strategy right now, you need to start with one. You can't really pick up 2, because if you do that, then your focus is distributed too much because you're learning so much, right? The only reason why we can trade more strategies is number 1, we have them automated, meaning that it doesn't really take any brain power from us. So that's that, right? But even if it wasn't, then the first strategy needs to be so engraved in our muscle memory, where we don't have to use our mental processing power, right? Where we don't have to think about it so much. Because if you do that, and I'm talking out of experience, I'm saving you a lot of time, frustration, and money here, is that when you have multiple strategies and you're live trading it, meaning you're there and you're with your emotions, with your thoughts, then you will miss so many things that you have written out in your rules, but you just miss it, and then you look back and you're like, damn, like I should have seen this is obvious, I didn't stick to my strategy because I didn't see it, right? Which is not your fault. Well, it is your fault, but it's not your fault in the trading, in the time of trading. It is your fault because you didn't prepare correctly. In fact, what you did is you distributed your focus too much without mastering the first strategy, right? And note, this is important, I don't want you to just get paralyzed with the one strategy either. The goal is to get one strategy, back tested, improve it with the points that I'm going to cover right now, and once that's done, get it into muscle memory. How do you do that? Just do a shit ton of trades, back test a bunch of trades, back test a lot of trades, and then take another strategy into your portfolio, right? That is the way to go. That's the way to go. And this is how you improve your trading, your brain, and your multitasking management and emotional management, all of that. Because the one big advantage, another big advantage over having multiple strategies is the fact that you're not as emotionally attached to the strategy because you have multiple, right? So as you distribute your focus, you also distribute your emotions, right? And the goal is to not need as much focus for strategy because you've done it so much, but the emotions are still distributed, right? Which makes it easier to trade. Okay, so how do we improve the strategy, right? So what do you need to do, right? There's essentially 3 ways you can improve a strategy. Yeah. And in order to know which way is the correct way for you, it's probably going to be all of them, but which way is the first thing to focus on is that you need to analyze the strategy, right? If you don't, and now listen to me, if someone wants advice about how to improve their strategy and they don't have a list, an Excel sheet of 100 trades written out in detail, entry, exit, TP, stop loss, notes, why did we enter, why did we exit, how did this trade apply to our strategy, was it according to a strategy, was it invalidated, like a full report on every single trade on 100 trades, then I say, okay, you actually know what you're talking about with your strategy, because that's something that we did, right? And this is something that I'm just starting to say, but I will keep saying it for a long time until one of your lazy asses will actually do it. And the first one that does it will get something from me. But actually 100 trades, which is like, we've done more, like to have this strategy, the amount of trades that we went through, and this is, like Alex has a lot of, takes a lot of credit for these strategies, because, I was quoting them, but, he was mostly the one going back and looking through every trade, and days and weeks upon weeks, every single day, like not leaving the house, going through trades. But that's what we did, and this is the result of going through every single trade, as far as we could go, like hundreds if not thousands of trades, which yes, it hurts to do, but it's something that we did. So you need to analyze it, right? Is my point. Now you have 3 ways of how you can improve a strategy. Number 1, you improve the profitability, right? So you improve either profit taking, the entries, or your management. So that's A, right? Your option B is to minimize loss, right? So you either increase profitability and the loss is the same, the risk is the same, or you keep the profit the same but you decrease the loss, right? That's number 2. And then number 3 is increase the volume of strategies, increase the number of strategies, and that way, without improving one strategy at all, you have 2 strategies. And because you have that, your account is less volatile and you can use more leverage. And you can use more leverage without risking more, right? So those are the three options that you have, right? So let's go through them. So improve profitability, right? How can you do that? Okay, so number 1 is you need to understand how you take profits, right? Let's take our trend reversal strategy as an example. How do we take profits here, right? Honestly, I've said this so many times, like, what are our 3 take profit levels on this trade? Who can answer this? Question to you guys. Who can answer the three what TP levels do we put on our trend reversal strategy? What 3 TP levels? Where's the first one? Where's the second one? Where's the third one? Bandy, Hubert, Casper, Hans should know this. Where's TP1, TP2, TP3? You got 10 more seconds. Exactly. Bandy with the winning answer. All right, so TP1. So okay, we understand the theory, right? Our theory is that, because this wouldn't be the entry, by the way, the entry would be like here, because of our strategy, right? So we touched the bottom of the range, right? In this case, we broke it, but we're returning our let's just go here, really. We bounced here, right? and we have our stochastic down, and we have an alignment over 3 time frames. So we're entering, right? Okay, so what do we do now, right? Well, we have our entry here. Our TP, what do we expect the trade to do? What we expect the trade to do is to go to the top of the range, which I would assume would be here, because here's the top, here's the top, here's the top, and then here's the bottom, and this is basically a new range, right? You could also say that the top of the range would be here because this is where we just were, right? So this is what I would do in a conservative case, like where my stop loss was before, right? So that's our top of the range. So that's our best case scenario. And so that's what we're expecting, right? Because we have a trend reversal strategy, so we reverse, and we're expecting for the price to go back to the top of the range from the bottom of the range. So if that's our likely scenario, what's even more likely than that happening? Well, even more likely is that we will go at least to the middle of the range, right? And as we have a very likely scenario, an expected scenario, we can have a best case scenario as well, which would be, the top, or like, just the next range, which would be like here in this case, and this would be our trade, right? So this is how we would set our take profit levels on our trade. So this is our theory, right? So we write it down, and then we do, say, we back this like 20 trades like this, right? So now 20 trades, we do these exact rules. And as we've done the work now, right? We have set those rules. So now we just go back into history, and every single time we get our triggered entry, we enter, right? And we just trade, and we do 20 trades. And as we do those 20 trades, we do zero thinking, zero emotions. All we do is we follow the rules that we wrote out before. Before, you were the thinker, the creative thinker. Now you're the worker, right? The worker doesn't ask any questions. He just executes on what the thinker did, right? You are two personalities in this situation, right? You're the one that makes the plan, and then you're the one that executes on it. When you're in the mode of executing on it, you do not question the plan. Questioning the plan is for the thinker. You're not the thinker right now. You're the doer, right? So that's what you do. You're the worker. So the thinker gives the task of do 20 trades. So what the doer now does is 20 trades without thinking. Just 20 trades, right? And as you get 20 trades, you write it all down, and then you give it back to the thinker, which is you too, and then you analyze it, right? So now you have an analytical phase, an analytical/creative phase, and then you have an execution phase. The execution phase is only there for you to get more data or to make money if you're live trading, right? So you do 20 trades, and then you go back, and then you check, okay, so in these trades, this was my theory, right? This was my theory in these trades. And this is essentially what I'm showing you right now is the scientific method. So like I assume that you guys learned it in school, but we're not deriving it from a textbook in school. We're deriving this from, an actual application in real life that will make us money, which is a much nicer application in my opinion. So that's what we'll do, right? We'll just do 20 trades based on the exact rules that we have written down on a sheet somewhere. So we do an Excel sheet. I can literally do it with you guys. We'll just do an Excel sheet, and then in that Excel sheet, we'll say, okay, entry is when we bounce off of the line, plus the stochastic is down. So this wouldn't even be a trade, right? We can say the RSI, maybe, it doesn't matter. Whatever you decide, right? You write it down. TP1 is middle of the range, TP2 is top of the range, TP3 is best case scenario. You take 30%. Stop loss is invalidation. And that's it, right? Those are all the rules that you have. Now you do 20 trades, and every single trade you note down what happened. Now after those 20 trades, you will have an overall summary of how much what your P&L is, how many trades you've won, how many trades you've lost, and all of that, right? So what do you do then? Okay, well, you look at the results and be like, okay, hey, maybe the middle of the range TP, like it gets hit a lot, but I lose a third of my potential account that, where I can make more. And it looks like, if I move this middle to like 2/3, it's still gonna get hit like the same amount of time, but it's gonna make me more money. So I can just try it. So then you try it, right? That's one thing that you change, and then you do 20 trades on another thing, right? You just do 20 trades again on another data set, right? This is important. And then you look at the data again. Did it improve? Did it not improve? Right? And this is basically how you do it. And as you do it manually, and this is the beauty of doing it manually, because what we did is we coded everything right away. So what we had was we had everything automated, right? Which you can say, yeah, that's great because you can do like 1,000 backtests in a day. Yes. But the thing that you're missing is that you're not experiencing the trade yourself, which if you do it manually, you do. And what we had to do, where it clicked for us, was when we went back to the manual method and manually looked at every single trade, because then we actually saw things in the trade that we did not test for, because we didn't even know that they were happening or that they were there in the first place. So when you do it manually, when you check the trades manually, it will mean that you will find things. So as you do the first 20 trades too, you will see so many things that you can change, which you will not change. You will only change it after the worker has done his work and goes back to the thinker, and then the thinker can do the change, right? But you cannot change it as you do the 20 trades. And as you backtest it this way, right? As you backtest your strategy this way, you will learn so much about it, right? And even if those, like at the beginning, it might take you a while to go through the trades, and 20 trades can take a long time, right? Even if I did this strategy and I did 20, okay, at this point I did so many times I would just do it out of muscle memory, right? But it would still take me like an hour to do 20 trades, right? For you, it might take 5 hours, So, it might take multiple days to do it, right? But it's worth it, because one thing is that you will test the rules that you have, but the other thing is that you will learn so much about the strategy, and I cannot stress this enough. Again, if I had to give someone one single piece of advice, and my life would be on the line if they would succeed or not, that's what I would tell them. I would say, just go, and it seems so simple, but just go through every single trade, and you will, in backtesting, like yourself, and you will understand so much about the strategy. It's crazy, right? Like that's the one thing. And it's so like, people don't do it because it's like, I don't know why, but like there's so many aspects of why you subconsciously don't want to do this. One, it's because it's work. Sure. Number two is because you will probably, you will most likely find things in your strategy that are not good, which means there are more problems, which means it's a confirmation that your strategy isn't as good as you thought, which means that you're set to lose more money. But all of those things suck, right? And you backtesting it means that you will most definitely find those things. So that's why our body, our subconscious mind, is just forcing us against it. But I promise you, the people that will end up doing it will win. Right? So that's an important part, right? And as we improve that strategy, right? In profit taking, right? That's what we were talking about. I went a little bit on the segue here. So number one is, you can improve the profit taking, right? You can change the amount of percent that you take. You can change the amount of TPs that you do. And you can also change where you set those take profits, right? That should change management and profit taking. Letter B, step B, was your risk management, right? So how do you improve that? Well, the easiest actually is your entry. Because if you enter too late, your risk to reward is horrible. If you enter very early, your risk to reward is insanely good. So being able to time your entry right will help you a lot. How do you time your entry right? You look at confirmations, but they cannot be lagging confirmations, right? Which means the stochastic is lagging, the RSI is lagging. But if you go to a smaller time frame, let me just click on replay here and go to the 1 minute. Right here, go to the 1 minute. See, so if I go to a lower time frame, then it might tell me that the timing is right. Right? Let's see what the 3 minutes doing. See? So my stochastics are bottomed up. That's why I'm saying by the way. Who doesn't know? But we have a perfect alignment here, which is something that I did not know as I was picking this trade. But I saw the trade play out well, and coincidentally, you have alignments on the smaller time frames. But as you go into the smaller time frames, you will get confirmations from non-lagging indicators. If you go to a higher time frame, you will have a lagging indicator, meaning that for this time frame to move, a lot of stuff needs to happen in the lower time frames, and you are trading a lower time frame. So this time frame will not tell you what will happen immediately in the lower time frames. It will tell you where the overall strength is going, right? It will tell you where the overall market's going on a higher time frame. So, if the market's trending up, then you're more likely to be profitable on your longs than your shorts. But it's not going to tell you if this is the right time to enter. And how do we improve our entries? By getting a better time to enter. Because if you enter, at much better times, you will have a much better risk to reward, which then again, if you decrease your risk, you can increase your leverage, which will triple your profit. So okay, let's look at it this way, right? So if you enter the long here, right, you have a 1.24 risk to reward and a 2% max profit, and also a 1.7% max loss, right? So let's assume that we can only risk 10% of our portfolio. I can only go in with 5x or 6x, right? So my $10,000, I go in 5x, so I'm trading with 50x, right? And the maximum that I can make is the maximum that I can make here is 10% on my 10 grand, which is 1 grand, right? However, if I enter here, my risk to reward is much better, and my stop loss is at 0.7%. So now instead of 5x, I can go 11, 12x, and my profit increased too. My profit number increased and my leverage increased. So now instead of 5x doing 2% profit, I'm doing 12x and I'm doing 3.3% profit, right? So that's going to be instead of around 10%, it's going to be 30%, right? So I just tripled my profits. Right? Yeah, sorry about that. It's like a 3 and 2. You'll figure it out with my audio description. But essentially that's what it is. So by increasing, by getting a better entry, I doubled my leverage and I essentially doubled my the amount of profit that I can make in this trade. So I quadrupled the overall profit, right? Just because I moved the entry down, because if you move the entry down, you don't just increase profit, you also decrease risk. So this is your biggest lever that you have, that and leverage, and if you have your risk, you can double your leverage for the same amount of risk, which means that it doubles your profit plus whatever extra percentage you gave it with the lower entry, with the better entry, right? Does this make sense? This is very, very important. Like improving your entry is probably the best thing that you can do for strategy, assuming that you have a good take profit and a stop loss, or like decent take profit and stop loss. And how do you do that? You look at the timing. How do you look at the timing? You look at lower time frame confirmations, because those lower time frames are not lagging. Higher time frames are. It's very important. So that is how you can improve profitability. How can you decrease loss? You can decrease loss by, well, number one, same thing, right? Better entries. And okay, again, how do you get better entries? One thing is looking at lower time frames. The other thing is letting the price come to you. So let's assume that I am on a 15-minute and I'm going down, right? As I'm going down on a 15-minute, I can look at the lower time frames and I can see, okay, so my 15 minutes going down, my 5-minute is down, my 1 minute is down, my 3 minute is down. So, on the lower time frames, we're bottomed up, so we're most likely on the lower time frames to bounce up, right? So as we're bouncing up, but the price is still going down, and I'm about to touch my level, well, I'm just gonna put an order here before the price gets there. And I'm gonna put another order a bit lower as well. So as this happens, as you can see, basically every touch has a wick, right? And this wick means that, the move happened relatively fast on a 15-minute, right? So what this means is if I put the orders here preemptively with my lower time frames, supporting it, right? Because we don't want it to just break down and like destroy us, right? Or like hit our stop loss. Our lower time frames need to be aligned, but as they are, we can preemptively put our orders there. And as we hit the orders, we will, if we hit these two orders, assuming equal position size or order size, our entry is literally the best entry we can ever have. Like, it's an insane entry, right? It's a crazy entry, right? No one that, reacted, didn't do it preemptively, but reacted to price action will ever get this entry, because what will happen afterward, we're just going up, right? So if you wait for confirmation over here, you will not hit this anymore, right? No matter what, you won't hit this level. The only people that got to this level were the ones that preemptively assumed that the price is going to be there. They got rewarded by a better knowledge of the strategy that they're trading. Literally what happened, right? So that's very important. So how do you decrease risk? Well, also with the right entries, right? You can also change where you put your stop loss. The smaller, the tighter you put your stop loss, the less you lose. However, the more it's going to be hit. And the larger you put it, the less likely it's going to be hit, but you're going to lose much, much more. So what's important here? What's important here is to realize what kind of strategy you're trading. If you're trading a strategy where you can, easily go down into your loss and then recover back up, and that happens often, then you can have your stop loss lower. If you have a strategy that is like here, a trend reversal strategy, and the price going lower just means an invalidation, well, then you should put the stop loss much tighter. How do you know for your strategy specifically? You backtest it. You check it out and you backtest it, and then you will know how it behaves, right? If you put your stop loss tight, right? But then you like Sath, for example, right? He had his stop loss to break even, trade management, right? This is also how you decrease risk, by the way. Stop loss to break even methods, or just trade management methods. But he used that. But what he said was that he got stopped out at break even so many times that he lost, a lot of great moves, which, also, by the way, if that's the case, but, the moves that you don't miss out on are huge too. And you miss out on like 90% of moves, but the 10% make you money. It's still a profitable strategy, but let's just assume that you don't want that, right? You don't want to miss out on many moves, which is, a natural human psychological reaction. So what you do, and you get hit, with the stop loss to break even, the break even triggers too many times, the stop loss triggers too many times. Well, that just means that, you need to move it, right? Because you backtested it a lot. And you know that the stop loss is going to get hit when you put a stop loss to break even. So you might need to wait with putting the stop loss to break even, doing it later, or moving the stop loss, but moving a stop loss a little bit and not all the way to break even. And then on the next TP, move it up, whatever works for your specific strategy, right? So the stop loss placement, right, and the trade management placement. Right, trade management is probably the most important factor in how to minimize your risk, right, or your losses. And let me give you an example here. I know I did this a couple times, but now we have the context. So this is the one strategy, right? It's trading. Then you have a bundle. That's trading, right? These are the profitable trades in a bundle right now, live trading. And you have this bundle, right? And it's trading, but essentially you can think about it as a strategy, right? It's just a strategy that uses multiple strategies, but essentially it's one big strategy, right? So now we have it here, right? This is a simulator that's simulating the data live as if it was trading live. And with that, what I mean is, it takes all the data, the information, the behavior that we get off of the market when we trade with larger amounts, and simulates that into the data with the right randomness, over many times. So these numbers are the most accurate that we can get for simulations, by far. So let's and the ETH turtle one, that's the one that's not on here yet. It will be there once the processing is done. So let me just put the allocation here to 100. I'll do an 80-10-10 on bundle 1. And this thing should load. And we have our equity curve, right? It's a solid equity curve. We have a Sharpe ratio of 2.8, which is just excellent, right? And over the course of like a year or so, a year and change, we have a 2,000% profit, right? From an initial amount of $10,000, we went to $200,000, right? Solid, not bad. So and this is great, right? This is without leverage, right? So what will happen now? Okay, so let's just have this and we're trading it. And this is, a well-managed strategy. However, let's assume that we're trading this and we're trading it with too much leverage. What would happen, right? You don't see it here, right? You go 10x or 80x or 2x here, you don't really see the difference. The only thing that you see is, if you make the money, you make a lot of money with 80x. And if you don't make the money, you'll tell yourself, oh shit, if I, just used 80x, I would have made a lot of money, right? The average leverage that's used on Binance is 20x, which is crazy, right? Like for us, going above 3x is like insane. So same strategy, nothing changed here, right? Let me move the leverage to 20x and see what happens. Exactly. So first of all, the numbers don't make sense anymore. what it means is that this is a doomsday scenario, right? It just blew up completely. The strategy died. If you were borrowing money, then you would be in very, very, very large debt, right? And essentially, what happened here is that you got so volatile with your leverage that the strategies broke, right? This is literally how it would look like if you were trading, with a high leverage, right? However, this is a mismanaged trade. What you can do is you can take a strategy. This would be a nice short, by the way. If you did, you can take a strategy and backtest it, and then you would see, okay, my leverage is too high. I cannot compound, or maybe, if I take out more money, if I do my profit taking right, I could tolerate that leverage, right? And if you did that, if you figure that out, now let's go back to the simulator, and this is profit taking. Essentially, it's showing us how much, it's a number between 0 and 1, and it's the percentage that we take out of each, percentage of profit that we take off of the table after each trade, right? As we're managing our strategies. So if we improve that, like if we put that on a 1 with a 20x leverage, right? Let's see what that does. Well, now we're consistent again, and the profit is 6,000%. All we did is we took off the profit off the table every single time, and we could use this leverage, right? So we went from 10 grand to $670,000, right? Because, and with leverage, so we could use the benefits of leverage, which is like, we trade with more money and we compound. But what we had to do is we had to go very, very strict on our profit taking. And how can we figure out how we can use our leverage and our profit taking and, our TP situation and stop loss situation? We need to back test. We need to back test the trades, right? Another thing that I wanted to show you guys is the dashboard, which also needs pre-processing, but this is just some old data. And this is for anyone that's trading the stochastics, right? This is something very cool. I know that this just looks very intimidating at first, but essentially what this is a visual representation of the stochastics. So what it shows you is it's in 30-minute intervals, and it goes on for every time frame above the 30-minute. And what it does is it shows you the value, and green means that it's going up, red means that it's going down. So right now, this is July 2023. We'll just, it will get updated, but the stochastic here right now is going like on the lower time frames is kind of topped out, right? Going down here. On a 30-minute, it's topping out, but it's going up. So we would probably wait for the 30-minute to turn red as well. Our 1 hour, 90-minute, they're going down already from top. And our 3 hour, our 4 hour, and our 6 hour, and our 8 hour, and our 12 hour, they're kind of, these three, they're kind of starting to go up, right? So what this shows you is that as you have, here you have the stochastic, and then you need to, click through the time frames in order to see all the levels. Here you see them side by side. That's one thing. The other thing is that you see derivatives of it, right? So this is the stochastic, right? And the color is it going up or down? This is the stochastic difference, right? So the difference right here from 71 to 73, right? It's around 2 point something. So we see the difference now, and now we see, does the difference increase or decrease, right? So now we will see, okay, so here we can see that our our 3 hour, right? So it just started going positive, right? But what this means, it just turned positive right now. But why did it turn positive? It's because it was going down, but the curvature of the line, right? The curvature of the line was going steeper and steeper up. So here we could see that it was going steep up, and because of that, we can predict before this even happens that it's going to go up, right? This is into more detail now, and I'm not sure how much you can use it at this point, but this is why it's important. As you get the stochastics into your muscle memory, this will tell you a lot, because now we can see that the difference is increasing, right? Meaning that we can predict that this is going to happen, right? Same with the 4 hour and with the 6 hour, right? Whereas here on the 12 hour and daily, we can see that the difference is actually decreasing. So it's going down, and these numbers are the same numbers because the pre-processing isn't done. When the pre-processing is done, then you have 30-minute intervals for every single time frame, right? But we can just assume that, you know, it's been going down by 6-7 points every time. So it would go 53, 58, 53, so on and so forth, right? 5 points every single time. And then it would, from the 5 points, it would go to 7 points. So it would start decreasing faster, right? And as it decreases faster, and then we can assume that, you know, it will probably bottom out, which will give us a lot of information, because when we know that the 12 hour is going to bottom out, then we can just go crazy on shorts. This was very, very detailed now, but, you know, this is the kind of stuff that we look at when I'm trading, right? And it will give me a lot of info and, you know, informational edge over other people, where I can assume where the stochastics are going to go. And that's, you know, sometimes when you maybe not, but when you saw me, you know, call trades and be like, okay, we're going down, but we will top up a little bit before we go down. Like, you know, I just look at this and I know that, you know, in the next 30, 40, you know, 1 hour, we'll be going up, but over the, you know, larger time frames, we will be going down, you know. And then the same thing is with another indicator. There's the squeeze. That's a squeeze momentum. It's this one. Squeeze momentum indicator. This one essentially gives you, you know, similar things as other indicators like the stochastic and the RSI. But, you know, if you use this, then you'll just have another nice confirmation here. And this one gives you the difference as well. And then the last one is the super trend. That one just gives you the super trends together, and then if it changes, then it's going to mark it here too. And the super trend is this indicator, which shows you what trend you're in right now, which is very, very similar to the tram actually, when we say are we above or below that line. So with this, what I wanted to tell you is, you know, if you are trading the stochastic strategy and you use this dashboard, then, you know, you'll be able to get your entries aligned better, which will result in more profit, less loss, which will result in using more leverage, which will result in even more profit, right? So this is very important. So what did we cover? Number one is, in order to improve any strategy, you need to have a strategy, right? You need to pick one. I gave you a couple examples. There's, you know, a bunch of strategies in the Discord. There's strategies in this dashboard. Just pick one, right? You have trend following, trend reversal strategies, all of that. Number two is you need to analyze that strategy and systematically, with the scientific method, just go through that strategy, segment yourself into two people, the creative person and the execution person, right? One person is doing the creative thinking, and then the other person just executes on it, right? Without any thinking. right? You're not trying to improve it while you're backtesting. You backtest it and then you're trying to improve it. You do that for a minimum of 20 trades and you will understand the strategy better. You'll know what to improve, right? What should you be looking at? Number one, what entries, like the timing of your entries, right? Better entries are a huge improvement in your strategy. Your TP levels, how many, where do you put them, how often do you put them? And this is the most important part. I don't know why I'm saying it this late in the call, but, and now listen to me, this is the most important thing. Every single time you make a change in your strategy, there needs to be a logical explanation why you do that. If you cannot explain that change, do not do the change, because that change is based on emotions or feelings, and that's not good. You need to be able to explain the change. Why do you move the take profit level to 2/3? Well, because the chance that we will move to the top 2/3 of the range when we're range trading is the same probability as if we went to the middle of the range, and I can prove it over these 20 trades. Bam. Okay, change it. Perfect. You cannot say, okay, I'm going to change this TP, or I'm going to remove this TP because I kind of feel like it, or because this last trade did this, and then the next trade is going to do this, right? No, there needs to be an exact logical explanation. What I will do after this call is, whoever's a member, right? If you're not a member yet, make sure to look at the Start Here channel, watch that video, and you will become a member. And when you're a member, I will send you an Excel sheet or a Google sheet, like template, where you can fill out columns as you go through trades. I think that will help you guys, because then you will have a standardized way of how to trade. And if you use it in the standardized way and you fill it out exactly, then what I will be able to do in the future is take that sheet, throw it into our system, and give you a full report, which would be pretty cool. So that is important. Main part is backtest the strategy, know what you're looking for in order to improve, and whenever you change anything, you need to have an exact reason why that thing has been changed. You have the dashboards. This one will be up in a few hours, most likely, and the turtle strategies will be here, which are the most profitable strategies. These are the most consistent ones. The turtle are the most profitable ones, and they will be on here too. And other than that, you can look at this, play around with the simulator as well. If you don't have the links, I'll just send them to you. Yeah, that was everything from my end today. If you have any questions, now is a good time to ask them. And if not, then as always, I'm gonna answer them later in the Discord. And yeah, that is it. I hope you guys got some information out of this. But really, backtesting strategy, probably the most important thing that you can do. And I can just tell you what worked for me, and it was exactly this, right? We backtested a strategy manually. We understood the strategy from the ground up, and that led to us building these exact dashboards that you're looking at.